Hello all, welcome to this week's live stream. If you haven't attended these before, I normally do them every Friday at 2:30, an hour after the payrolls announcement and just as the US markets are opening. And in this, what we do is we'll take a look at a mix of different things. So we'll take a look at the major announcements for next week. I'll talk a bit about some of my trading. It's been a good week this week, one of the best weeks for a while. And then we'll take a look at the markets, the major markets, so the indices, FX, oil, gold, Bitcoin, all the usual. And if there's anything that you want looking at, if you just put it in the chat, and we'll take a look at it when we've been through the stuff, the usual stuff that we look at every week. It's been an interesting week, I think. It's been perhaps a bit slow, but we have seen, this is the S&P. We saw the S&P from Tuesday get a bit of a move on, breaking out to all-time highs yet again. So look at the big trend. There we go. The big trend continues in the S&P and, of course, the NASDAQ. I mean, US markets were shut yesterday for Independence Day, 4th of July. So they were closed, but opened again today. Bit of volatility over the payrolls, as you can see, but no real drama by the looks of it. UK markets, we had the election in the UK, we're seeing a higher pound, but we're also seeing a higher euro because of a weaker dollar. So we've seen very little reaction. There's the FTSE. There's the FTSE selling off a bit, but no real reaction to the UK election because we didn't have anything really in the way of surprises, did we? I don't think when it came to the elections in the UK. So that's that. But bits and pieces to talk about. I'm long the S&P anyway. Been long from early in the week. Long the French index. If you subscribe to the newsletter, I think I did mention that. Was it last weekend or the weekend before? I did wonder. We'd seen, a really weak performance by some of the European indices because, again, of the political backdrop in Europe. I wondered if there was an opportunity there, so I bought that this week about 75, 50-ish. I can't remember, something like that. So that's done all right. That's up about 150 points. But let's see. We'll get into it a bit more when we look at it properly. But like I say, if there's anything that you would like looking at, if you put it in the chat, we'll take a look at it. I'll go through some of my US stock trades as well today. I've done 91, I think, trades on US stocks this year. I'm just having a look. 90 trades. So I'll go through some of the numbers for that because it's been a good year for US stocks. But before we do all that, let's get this housekeeping stuff out of the way. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. I'll put the light on because it's a bit dark in here. So that's that, okay? I did a webinar about 2 weeks ago now on options on a Wednesday evening. It runs for about 90 minutes. I covered understanding options trading, the basics of options, why options are usually not good for trading direction, other option strategies, and how to manage risk using options. If you'd like a recording of that, to watch the recording of that, like I say, it runs for about 90 minutes. I've been trading options for more than 15 years. Big fan of options, medium-term strategies I do with options. But if you'd like to watch that, if you join the WhatsApp group, you get access to that. There's a discount thing. YouTube, I think, is the code. I'll give you the details later on, but you can have access to that webinar. And in the WhatsApp group, I talk about the trades I'm doing, 2 updates a day, any questions, all of that. So it's a pretty active group, but you get access to this. This is probably the last time I mention this. So if you'd like to see that options webinar, if you sign up for the WhatsApp group, then I'll send you the link over. So next week, what have we got? We've got Powell's speech, so the head of the Fed in the US on Tuesday. So that could cause, a bit of volatility. But the big one, I think, is really Thursday. We've got UK GDP, so how well or not is the UK economy doing? But we've got US inflation data. So CPI out on Thursday. Inflation, I think, is still a big theme for markets. Lots of speculation about where interest rates are going to go, all of that sort of stuff. And then on Friday, we've got the US Producer Price Index. So a quieter week next week, but still that Thursday data, that US inflation data, is going to be a big one. So let's see how that goes. The WhatsApp group I run, a daily update twice a day from me, markets I'm watching, trades I'm running. I do mention all the trades I'm doing. I mentioned the French trade and the S&P trade earlier this week. Those are the two trades I've done. Q&A, if anyone has any questions during the day, they can fire them in. If you sign up using the code YouTube, you can have access to that. If you go to my website, the link is in the description to this video, David Jones Trading. And if you go to subscribe, you can sign up for the WhatsApp group there, and you'll see the various trading courses that I run. But I've been running this WhatsApp group for about 1.5 years now, and it's pretty popular. Good number of people in there, so it's pretty active. So try it for a month and you get access to that options course anyway. So what I talk about in the afternoon, before we get into markets, I mentioned earlier this year I was going to be doing more US stock trading, and I have. So this is the spreadsheet. I've normalized this for 220 quid risk per trade. So I've done, as you can see, at the time of this spreadsheet, which is the end of June, I've done 90 trades on US stocks this year. About 45 of them are still open. 48 of them are still open. And I try and do a trade a day, and this is one of the things I mentioned in the WhatsApp group in the afternoon. So it's done all right. If we zoom in, let me zoom in a bit. If I make this a little bit bigger, it's a really quite relaxed approach to trading, running positions for days, weeks, sometimes months. The return on margin so far is 18%. That was as of earlier in the week. I think it might have bumped up a bit more. So pretty relaxed. It takes me, with this trading approach, about half an hour, 45 minutes a day. Really low maintenance, but it's done well. Long and short. Obviously, we've been in a market that's gone up, so being long stocks has done well. Anyway, and it's something I'm going to continue doing. Every afternoon, I talk about the stocks I'm looking at and the trades I'm looking at doing in the WhatsApp group. Of course, I've got to say, past performance is no guarantee of future performance. But, at the moment, it's on track to make about 30% this year for very little effort. It has been a good market for trading US stocks. I've got some big winners in there. If I scroll down, what's been the biggest winner this year? Google has been one of the bigger winners this year. But other stuff like Boston Scientific from back here, I think that trade is still running on Boston Scientific. So it's been an interesting experiment. That was a big winner. What's that? General Motors. Oh, Dexcom. I'm short Dexcom. So that's my stock trading. And I share this data. I share this spreadsheet, with people in the WhatsApp group. If you'd like a copy of the spreadsheet, anyway, drop me an email, dj@davidjonestrading.co.uk. But like I say, all of these 90 trades I've done so far, I mentioned in the WhatsApp groups. That's what I cover in the afternoon, and in the morning, it's like a more broader market update thing. So that's that. Okay, so that's that. Join the WhatsApp group. That's what a typical update from me looks like in the morning. I do a training course, 5-star Trustpilot reviews, and then finally I send out a newsletter every Saturday or Sunday, which is free of charge. If you're not signed up, if you go to the website, you can sign up for it. This seems like a pretty well-developed template. It's years of honing Excel. I am by no means an Excel genius. I'm not actually. I've got absolutely no clue. I've got to Google stuff like how do I calculate the difference between two dates. But it's really good for me, and I really, for me, it's all about the data. So I don't care about any individual trade. What I care about are these numbers. What returns is it making? That's really the important stuff for me. That's what the P&L chart looks like. So you'd need, probably at the moment, based on 200 quid risk, the margin requirement is about £20,000 on this, with all the trades I've got open. I mean, you could do it with £2,000 or £200. You just need to trade smaller, But overall, it's done really well, and it's a big focus for me now. The more medium-term stuff. I still do the short-term stuff like the S&P and the French index, the CAC trade this week, CAC 40. I still do those, but the medium-term stuff, I'd really like that, just running a load of risk and seen that spreadsheet has been around in one form or another for about 10 years, I'm going to guess, Ian. So it's sort of been honed along the way. So like I say, with the WhatsApp group, you get all of that. And if you join up this weekend, I'll send you access to the options webinar before I take it away. Okay, let's have a look at everything. So, like I say, it's been a good week for me this week. I've got lots of US stock positions. I've been long the S&P. My usual mantra for when we look at US stock markets, the trend is up. What are you going to do? What are you going to do? You're going to buy it? Well, I'm going to buy it anyway. So here we are. We've even since the last less than 3 months, we've seen the market go from 5,000 to where we are now. We've seen a 10% rally. Even after that sell-off we had in April, the first few weeks in April, which was a bit painful for me with all the stock positions. But the trend carries on. So I'm long. I can't remember where I bought. 54. 65, I think, down here somewhere. So I'm in from 54.65. I've got a trailing stop on it, and if it carries on going up, happy days for me. I'll be buy the dip going into next week. I'd buy the dip on this market because the trend is clearly up. So all the bears who've been trying to call the top have all been wrong so far, at least. So same for the Nasdaq. So Nasdaq, here we go. It was the same actually this time last week. We were making all-time highs, and here we are again, making all-time highs again. So again, I'd buy a dip if we got a deeper dip back to the lows for this week from Monday. If that happened next week, perhaps we get a bit of volatility over these inflation numbers. Perhaps there's an opportunity there. But these markets are really strong. If I was a buyer today of the Nasdaq, the closest I would have my stop is the other side of the Wednesday low. So the last day the US market was open just before Independence Day. So the other side of 20,000. That's that. Japanese market. Also, it'd been hugging that trend for a while. Been sort of quiet, but again, we've seen a bit of a move on in the Japanese market. Not too far away from breaking out to all-time highs. Interesting one to watch next week. Just above 41,000 was the previous all-time high from March. Let's see what happens there. But an obvious trend in the Japanese market. So I'd be a buyer of the dip there in that market. The DAX, I was in the DAX the other week. I came out of it a bit too early. Came out of it here somewhere on Monday. But that's another one that's been in recovery mode. Great run on the DAX this week. We were talking about this level in the WhatsApp group, 18,050. And the market rallied 600 points off that. So I'd buy the dip. I wouldn't want to chase it, but I would buy the dip in the DAX. I need to adjust that trend line. It's a bit all over the place. But yeah, I'd be a buyer of the dip in the DAX. 18,050 would be the level I'd watch going into next week. The French index, so the trade I did this week, I thought that was I wouldn't say it was an obvious trade, but I thought it was interesting, because we had these lows. This is the hourly chart. We had the lows on the French index mid-June. Came back to it. It was last Friday. And then it gapped open on Monday of this week after we had those French elections over the weekend. And it came back and it held. So that was the trade. I bought it too early. I bought it about here somewhere. Sold off a bit and it's bounced back. So I thought that was an interesting level, that 74.60, because we had seen big sell-off for the French market from the May highs, 82.60 down to 74.60, 10% sell-off. So I think that's another interesting one to watch next week. I've got a trailing stop on that trade now, so I don't really. Let's see what happens if it carries on going up. Great, but if it sells off again next week, I think that's an interesting one. The French market. So let's see what happens. The FTSE, as usual, doing its own thing a little bit, but the FTSE 100, fresh all-time highs in mid-May. So again, I'd be buy the dip. We've had this 8.1 level over the past 2 months or so. Has held the market up. Maybe it's clearer on an hourly chart. There we go. Or 7.9 back here, 8,000, whatever. But yeah, I don't trade the FTSE. I think there are better markets to trade in the FTSE, so I don't tend to trade it. But the broader trend, like all other stock markets, is still up. The Italian index again moved in. It's in a way similar to the French, where it sold off and it's bounced back. So that's that. I think the Hong Kong index is an interesting one. I've been watching this for the last few weeks, thinking about being a buyer, but it's still going down for now. We had this big downtrend in the Hang Seng from Feb 21, so 3 years. Broke out of it this year. We've rallied, big old rally, and it's selling off. And what I'm waiting for is one of my famous squiggle setups. The sort of thing I'm waiting for is the market to do this, pow. But it's not at the moment. It's still selling off. So I don't know. I don't know what's going on with that. I can't delete that now. Delete it. No, it doesn't want to delete it. But I think that's an interesting market to watch to see if we do get something of a bounce. So I'm watching this recovery trend. If we pick up on this, there we go. So I think that's an interesting market, the Hang Seng, to see what happens next week on that. Let's see where we go. So that's all that. Dollar index. I thought that this move in the dollar, we've had a good recovery in the dollar. Had past tense during June into the end of June, and since then it sold off. So we're seeing some big swings. Over the last week, the dollar has dropped about 120 points or so. But in the great scheme of things, we're still stuck in this range from April. So nothing too much exciting for me when it comes to the US dollar. I'll be a buyer of the dip down here if it got back towards 104. But at the moment, it's pretty much in the middle of the range, isn't it? So not much interest for me. Pound against the dollar, we are seeing the pound and the euro stronger because of this dollar weakness. But again, look at it. That's the pound over since November last year. So 6-7 months of the pound. And we just got a pretty much a wide sideways range, haven't we? So not too exciting for me. Bitcoin, I thought was worth the mention, because Bitcoin, I don't trade it very often, but Bitcoin has broken what had been good support from late April. So 56,500. It's gone sailing through that today. So quite interesting to see what happens with that next week. The big trend for Bitcoin going back to 2023 is up. So I'd be looking to buy a dip. It's just when does the market stop dipping? So I think that's an interesting one to watch next week. I think for me maybe 48 to 50k would be a level I'd be thinking about having my stop beyond if I was a buyer of the dip. But let's see if the thing stops dipping next week. But I thought that was an interesting market to watch. Before I do anything else, let me have a quick look at what's moving in my stock trades. Google is up again today. I think I said that was one of the bigger winners for me this year. Amazon, almost up. Moose taking a bit of a hit. I bought those the other day, I think in there. Nothing too exciting for the rest of it. Okay, let's go back to the broader stuff. So Bitcoin, we did Bitcoin. Let's take a look at gold and silver. I mean, gold's had a good run. Gold, again, has been, I think, another boring market, a little bit boring, over the last couple of months. And I was mentioning in the WhatsApp group I was going to buy it, and I never did, down at 23.20. So I missed an opportunity there. From a short-term point of view, 22.85 to like 2300 has been support, and it did come down to there a week last Wednesday. And here we are, Is it going to run out of steam again, gold? Particularly if we get a dollar bounce back, of course. I think next week, 23.90 could be a level to watch. It's had a little look up there today. So perhaps we'll see gold under some pressure next week. We are a bit sideways overall since April on gold. So, nothing too exciting for me there at the moment in that one. Silver, I did mention this one again this week, I think in the WhatsApp group. I thought it was interesting that 28.60 was holding on silver, and we have built this trend higher. So that's got a bit of a move on, which is interesting. Let's see what happens. We have had rallies over the last 6 weeks or so in silver, and ultimately they've run out of steam. So not very exciting market there. Is this one going to run out of steam, or are we going to take out the old highs at 32.50? Let's see what happens. Copper, I've missed this one this week. This was a good trade this week, but I missed it. So the market had been trending lower, lower, lower. Starts building this recovery from last week. And it's been a really good trend this week. Higher highs and higher lows all week. You know, the big trend for copper had been up anyway. This was an all-time high for copper in May. Big sell-off though. Almost, was it 20%? Not quite 20% sell-off. Interesting to see where it goes next. But again, if we saw copper under a bit of pressure next week, I'd be a buyer of the dip there. Oil's been interesting. We did see it, when was it? Earlier this week, hit its best levels. This was on Tuesday. So the best levels since April. So we had a 2.5 month high earlier this week on oil. The trend is still up. There we go. If we take it all the way back to the beginning of June. So it's been in an uptrend since the beginning of June. So for me now, I would still be a buyer of the dip in in oil. The closest I would have my stop if I was a buyer at the moment would be underneath the lows from this Wednesday. So 82.70 on my chart. That's where I would put my stop if I was a buyer of oil. But that's an interesting one, I think, going into next week, because we had this uptrend. Natural gas, which is the market I hate, still going down, natural gas. I was wondering, we had this old support on natural gas on the dailies, end of May lows at 235. And we've just been trickling through it this week. So yeah, that's off, what's that, 20% plus since the middle of June. Bit of a crazy market as usual, natural gas. Let's see what happens next week. I think that might be an interesting one to see if we get a bit of a recovery in natural gas next week. And I think that's it, isn't it? And when it comes to commodities and stuff, we have seen palladium has had a bit of a run, for example, over the last month. But in the great scheme of things, I'm not quite sure if the trend is still down. You know, we've still got some big barriers for palladium, so nothing too exciting there. Soybean is one I've been watching and one I think I will buy next week. We did have a big downtrend in soybeans. Arguably, it is still down, but the trend for the last few months or so has been up. If I was a buyer next week, I'd put my stop below the lows from Feb, which were about 11.20. So I think that's maybe an interesting market to watch. Cocoa, which had been a crazy market, one of the crazy markets of 2024, up until April. You know, the price of cocoa went from about 4,000 to above 12,000 within the first 4 months of the year. Lots of volatility since. So for me, the jury is still out. But if I was a buyer now, I put a stop below that 7,000 or so level from mid-May. So lots to watch as usual. For me, as ever, the focus is going to be US markets next week. We've got US inflation data out next week. So S&P and the Nasdaq, big focus for me, particularly with all the US stocks. European markets have recovered since they got spooked by the political situation in continental Europe. Interesting to see what happens there. I would buy the dip in the French and the German indices if we get it. Hong Kong is interesting from a longer term perspective to see what happens there. The Japanese market, the Nikkei, do we see all-time highs next week? Bitcoin, what happens now this old support's broken? Are we going to see a sell-off down below 50,000? Let's see what happens there. So a load to watch, and you know, the likes of oil, you know, because it has had such a good run since June. Is it going to continue? I still buy the dip for now. So plenty to keep an eye on next week. I won't be here next Friday. I just remembered it's the Goodwood Festival of Speed next Friday, so I'm going to be looking at cars I can't afford. What I should do, if I was a proper YouTube trader, I'll take my picture next to a few Lambos and use it to sell a course and pretend they're mine, like a lot of these people do. But I won't. So there'll be no live stream next Friday, but I'll be back the Friday after, I think. And that's it really for markets. So let's take a look at some of the stuff you would like looking at and see what we think. So as usual though, don't forget to find out more, go to the website, join the WhatsApp group. I'll still be doing updates on Friday, even though I'll be away looking at cars, but I won't be here for the YouTube. So go to the website to find out more about the courses and my approach to trading and the WhatsApp group and all of that. And if you use the code YouTube you get 20% off the first month WhatsApp group. Right, can we have a look at Alibaba? From memory, that was turning around its downtrend and then dropped again. Let's see what it's doing. Oh yeah, I don't know. What do you think? Oh, because it was breaking out here, wasn't it? God, it's got as long ago as that. More than a year ago, 18 months ago. So December 22, it tried to break out this downtrend, and then it's just slipped again. I mean, I wouldn't buy it. I think there are, for me, there are much more interesting stocks to buy, but that are actually in a trend. It's trying again, isn't it? So for me, the trade would be, if I was doing the trade now, if I had to do anything, I'd be a buyer at $74, and I would put a stop at least underneath the lows for the year, which are what's it look like? 60 something, 66 and a bit. So that's the trade I would do. So I'd say, okay, maybe we're seeing it trying to stage a recovery again. It's pulled back, buy it with a stop under 66. And I think the risk is if it breaks 66, we could have a trip all the way back down to 58. So it's not the most exciting one for me. It's always interesting to look at it. But again, I'd be maybe attempting to call the turn on that one. I think that's what I would be doing on that if I was looking at Alibaba. What do you think about SBB_B? I don't know. SBB, oh my God, okay. Is that Norwegian or Danish or Swedish? I never know the flags. It's a bit rubbish, isn't it? I'd have to say. I mean, the thing has gone from 68, 70 down to 6 things. So yeah, it's not really one for me. It's pretty volatile as well, isn't it? The thing has gone from 620 on a week last Tuesday down to 4.5. So what's that? It's a 30% move, and all the way back up again. I think that is what I would have to say what they called slot machine stock. I think where you sort of buy it and close your eyes and hope for the best. I mean, it has been trying to make a base, hasn't it, since that big sell-off. There's not much conviction above 660. So if I had to do anything, I'd be tempted to go short, I think, up here. If it broke 660, I'd change my mind. But stocks that look like that don't really appeal to me. I would much rather buy the Googles of this world that look like that. Yeah, but yeah, good luck with it, whatever you decide. It's interesting to see what happens. But for me, it's absolutely bombed out. And yeah, this has been a barrier since July 23. So that's a year now. This 650, 660 area has been a barrier. So yeah, not one for me. If the US cut interest rates in the coming months, and with Japan increasing interest rates, would you be looking to short dollar yen? No, I don't care. You know me, I don't care about that stuff. I would go with the trend. And if you look at dollar yen, what's the trend in dollar yen? It is up, up, isn't it? Yeah, so I wouldn't overthink it. I would buy the dip in dollar yen. That's what I would do. I mean, it'd need to be a big dip at the moment, perhaps, but we could get that. With inflation data out next week, we could get some volatility. If I was a buyer today, I'd probably want my stop at least the other side of 158. So yeah, I don't overthink trying to second guess interest rates as usual. My approach is trade what you see, not what you think. And for me, and I'm sure for all of you, we can see what the trend is in dollar yen, and it is not down. So yeah, I'll be a buyer for now on that. Could you please take a look at LVMUY? LVMUY. Okay. Louis Vuitton. Louis Vuitton. Moet Hennessy, Louis Vuitton. Okay, so the champagne and posh bags. It's tricky, isn't it? It's another one, isn't it? Just a bit, well, I don't know. What would you do? I mean, we have a downtrend from July last year into October. Then we have an uptrend. Then we're in a downtrend. So for me, I would probably have to go short. If I did anything, I'd go short. That one with a stop above 168. I'm guessing this is euros, isn't it? So I would go short with a 168 stop. We do have this big old support. So maybe we'll see him turn around during the summer. Big old support at 138. But for me at the moment, I'd have to go short Louis Vuitton, I think, for now. Which reminds me, let's have a quick look at Tesla, because they did good numbers this week, didn't they? Was it this week? I thought that is a short. Oh, but not yet, maybe. I mean, Tesla's... it's quite interesting, Tesla, I think, going into next week, because this 268 was a big level for Tesla to see if it runs out of steam. I wouldn't go short today, though. Yeah, I would be short on that one, Louis Vuitton, because the trend is down. ABX. Barrick Gold, of course. Gold, it's always interesting. These gold miners and gold explorers never move with the price of gold, or rarely move with the price of gold. You're much better off buying gold than you are buying a gold miner if you want to try and profit from a move in the gold price. Anyway, blah blah. And you can see it here. You know, it's just flat, isn't it? It's been flat forever and down. So you've got gold set all-time highs within the last few months, didn't it? Look at Barrick Gold. It's just boring. It's a lot of boring stocks today. What's happening? Is everybody up all night watching the election and we're all a bit tired? Yeah, it's just stuck in the middle, isn't it? It's absolutely stuck in the middle. Barrick Gold, you know, we've got, what's that from? That's from last year. That's from this year. And it's just in the middle of the range, isn't it? So for me, it's nothing. I don't even know. What would you do? Nothing. Nothing. If it was up here a bit, I would go short. If it was down here a bit, I would go long. And it's just in the middle. So yeah, there isn't really a trade for me in there. Let me have a look at what trades I was thinking about doing this afternoon on US stocks. See if I can find anything that could look mildly interesting for this afternoon. I'll try and chuck in my own stuff. ADI, I've been watching this one for a bit. I haven't bought it. Analog devices, because it had this big run up and it sold off, but perhaps not yet. Cardinal Health, I'm in this one already, but I thought about adding to this. I thought this was an interesting stock, Cardinal Health, CAH. Big trend since June 22. All-time highs in March this year. Sells off, bounces, and here we are again. So for me, I would buy the bounce if it bounces. So it's probably one for next week for me, Cardinal Health, and to see what happens there. What else? I'll give you one more from my top secret list. Eastman Chemical. I think they're still sliding though, Eastman Chemical. Oh yeah, but it's another one, you know, where the trend has been up, and I was just wondering this week, are we going to see the bounce? But not so far. But maybe one for next week as well. I won't probably do anything this afternoon, but let's see how it all is. Nvidia I thought was a buy this week if people were brave, with a stop under $100 would be my trade, because you know, so we had all-time highs a couple of weeks ago. It's sold off, but it has held. It's held above 117. You know, we've got lots of support on Nvidia. So for me, I think it's a volatile stock. You know, you need to be prepared for the volatility. But we all know, you know, the trend is up on Nvidia. You know, don't we? You know, so our trend at the moment over the last couple of months looks something like that. So if I was a buyer, the closest I would have a stop would probably be 115, but I'd rather have it below 107. But I think it's interesting. You know, it's a bit quiet today. But let's see what the rest of today is like. What else have we got? NIO, the Chinese electric car company. Let's have a look at those. Let's have a look. Will they look on the dailies? Oh, they still look a bit. I mean, again, it's one of those ones. If you were trying to pick, I would want to go short. This early May, with our Harry Hindsight hat on, was a good short opportunity, and they had good numbers, but the market doesn't care, does it? If I was a buyer, I'd be stops under 360 on this, but you know, we had this old support from June 23, and they've just gone sailing through that this year, haven't they? So for me, they still look a little bit weak, Nvidia. I mean, look at that, $65, $66 a share to wherever we are now, $4.50 a share. So for me, I would still rather be a seller of rallies rather than a buyer of buyer of dips. But it'd be interesting. Let's see what happens around that 360. Sorry, can you look at LVMUY again? LVMUY again. There's a long-term trend from 2020 that I didn't address. I will address it now. Let's have a look. Oh yeah, I see what you mean. Fair point. Yeah, I'd still, on the time frame I look at, I'd still go short. But totally get your 2020 trend. Looks like that. So for me, I would be looking at that trend from March 24 and still looking to go short. And then if we do see it base again at 130 ahead of 140, it looks interesting. So yeah, so I'd still be at the moment. I'd still rather sell a rally, and let's come back to it in maybe a month and see what's happened down here. And if it breaks 138, I would be short again. But yeah, no, I can totally see what you mean about that trend. The only thing I would be a bit concerned about that long-term trend, it was all looking fine until here, July 23 and October 23. But the subsequent rally that we had off that move to the trend line in October 23, we've not had a higher high. So that we had a higher high here, higher than that high. So my only concern from a longer-term point of view would be, is it losing momentum in the long term? So let's see. But interesting. It's always interesting to see how all this stuff resolves. But for me at the moment, I would be sticking with that trend from wherever it was, March 24. What do you think about Lloyd's BGOE? Lloyd's. I think it's boring, Lloyd's, but let's have a look at it. Oh no, it's breaking out. I take that back. I think we looked at this last week and I said I'd have gone short and I would probably be close to getting stopped out now. I think that's an interesting one for next week. You know, we've got these levels, 56 to 58 pence. So it's a tiny penny stock effectively, that had been a barrier since January 22, for 2 years now, more than 2 years. And it's breaking out. So are we seeing a new trend starting in Lloyd's? For me, it's a bit early, but I think that's an interesting one for next week. The closest I would have my stop would probably be 52. So for me, I'd never trade it because it's too small and I don't really do UK stocks. But I think it's interesting. One for next week, that one. BGEO. Bank of Georgia. Do you know what? Is this one I had on my list? Let me show you. I've got a list here called ISA and SIP. Oh no, it's not those. I've got BDEV in there. I was thinking about buying. So let's come back to that. But BGEO, Bank of Georgia, I would have to buy that. So again, I think it's a UK listed stock, isn't it? Lovely trend from whenever it is. We go back to March 22, really. So we're 2 years into that trend. Look at that. It's been almost textbook, that trend, isn't it? Bang, 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 bang. So yeah, I'd be a buyer. So it's 41 quid a share, by the looks of it, £41 a share. The closest I would have my stop, at least the other side of 36, if not further, and actually probably further than that. But that's it's a classic long-term uptrend, isn't it? So yeah, nice one. And BDEV, yeah, I was looking at Barrett Developments, which is the house builder, because the dividend is quite attractive as well. The trend is up. Let me have a quick look. What's the thing? BDEV dividend yield. Yeah, there you go. So the Barrett dividend yield is 5.5%. So even if the stock goes nowhere for a year, you still get 5.5% in dividends. But I liked it because of the trend. So when was it? It was just before I went away. I was thinking about buying it, so it would have been somewhere in here, but I didn't. But yeah, I'd be a buyer. The closest, because the trend is up. It's had a tough old time, but it has been recovering since October 22. So yeah, so I'd buy that, and I'd put a stop at least the other side of 440, if not further. So interesting, couple of interesting stocks to finish up on. So that's it. We'll wrap it up there. I'm going to go and do my US stock trades for the afternoon, and see how that works out. See if there's anything there. Maybe there's nothing there today. So I'll be back in 2 weeks' time. To find out more, go to my website. If you sign up for the WhatsApp group, you get access to the options webinar, which is worth at least 6 months worth of WhatsApp subscriptions, in my highly qualified opinion. And then you get all the benefits of the WhatsApp group. And it just runs month on month. So if after a month you don't really like it, you don't need to carry on with it. But go to the website, find out more, use the code YouTube to get a discount. And that's it. Okay, thanks for coming along. Good luck with your trading in the next couple of weeks. So I'll be back in whatever the date is in a couple of weeks' time, the 19th of July, and we'll do it all again. And that's it for now. Okay, see you then.